If you're looking for ISAs and marketing, please contact Lopez Enterprise, servicing all 50 states. What's going on? Welcome to Let's Talk About It. Your favorite mortgage advisor, Jimmy Mortgage. Today's topic is about the all-in-one. I got a special guest. His name is Ramel, who has a financial background, teaches entrepreneurs and first-time business owners how to acquire business. He brings insight and practical approach on how to build financial success. Let's talk about it, Ramel. How are you, man?
I'm doing well. I'm glad to be here.
Yeah, man, me too, man. We made it happen, right?
Finally,
man.
Is it long overdue?
Yeah, man. I've been scratching that door for a minute, man.
Yes, sir. Yes, sir.
Okay, so Ramel, what initially got you into the all-in-one loan product?
So actually, my brother, who's a financial advisor, so he introduced me to the all-in-one loan. And I remember you had came in and actually did a class in our community, and you talked about the all-in-one loan. So my goal was to always buy a primary residence, a single-family home, but just doing it the right way, strategically. So I rented for years while I grew my business, and then I had a duplex that I lived in for years. So then when I'm finally ready to buy my primary home, I didn't want to do something traditional. I wanted to do something that gave me more freedom, more flexibility, and the opportunity to pay it down in a faster time and save more money. So, it was really my brother Jamel who actually introduced me to the all-in-one loan product in particular.
Yeah, it was nice. Jamel had me in the classroom. I saw so many people in the class when I spoke about the all-in-one. Everybody was cheering. And when your brother broke it down, how easy it is to use, he made my life easy. They just wanted to know, what do I need to do to make sure I get this product, right? And so, I thank your brother for that. And there's a lot we could talk about with your brother, with him being setting the financial goals for many in people's lives, right? So that's a good thing. So you used it yourself. Did you find any complications with the product, having to use it?
I haven't had no complications. I actually love it, because it gives. I literally have my mortgage is a line of credit.
Okay, that's
I have a debit card. I have a debit card, right? So it's just a cool way of me being able to have more flexibility and not having to, borrow my money again, right? I don't have to go do a refinance. All of my money and the equity that's built, as long as I pay it down, I'm able to reuse it, as I can. I think the biggest thing for most people, and me in particular, you have to have some cash flow coming in.
Liquidity is key.
Yeah, you have to. Yeah, you have to have liquidity because, the liquidity is what keeps the principal down as much as possible. So that your interest is lower. Now your monthly payments is going to be low. If you don't have a lot of cash flow coming in, it's going to be tough. But the process, it was a seamless process for me. I didn't have any issues.
Okay. So did you come across any misconceptions with the product? Because one of the things that, well, like you said, in many of your social media posts, people are conditioned to know one thing only. They never get out of that box, right? So when you think of the all-in-one, right, think of it this way. It is a mortgage, but it's simple interest versus compound interest. And many do not know that. Many wake up and they think of a mortgage as like either you get a 15 or a 30. Nothing else is taught to you when it comes to the mortgage world, right? So you get professionals like myself and Ramel talking about the all-in-one. There is a simpler way. You just don't know about it. But we're echoing and letting you know that this product exists if you're disciplined with your money. When I say discipline, so this product works for someone who's making, hypothetically, you're making $10,000 a month net deposit. Your mortgage is $4,000. Your expenses are $4,000. So 4 and 4 is 8. That means you have $2,000 left, right? So if you spend $1,000 on blank you money and there's another $1,000 remaining, you could take that balance and apply it towards your mortgage, which is the line of credit, simple interest. Where if you was on a fixed income, you wouldn't be able to do that. You would have to send a special payment to principal, allow that to go down. This product works for someone like that because they're not living check to check. This product is not good for you if you're making you're making 8, your expenses are 4, your mortgage is 4, because clearly that means you're living check to check, and this product wouldn't make any sense. So why this product advances your payment quickly and reduces your principal balance at the same time giving access to that equity is because that remaining balance, because you're not check to check, that excess money is going towards your principal balance. So interest is applied basically only on the principal that's left. So every time you apply the net positive to that balance, you're reducing your principal balance. At the same time, you're not paying as much in interest.
Yeah.
So that's the thing that sometimes people get confused about. And this is why I wanted to have you to tell the story about it, because people are still in that mindset that we're conditioned, like you said, only fixed makes sense. Nothing else makes sense when it comes to mortgage. You have to understand how compound works. Compound is in the interest of the bank, not for you.
Yes.
And when you're using simple interest, you're working for your equity. So why not use your money and get rich from it, as opposed to giving it to the bank that's giving you next to nothing, 0% on it.
Yeah.
At the same time, you don't know what else to do with it because you're conditioned to just take the fix, not pay down your principal. So this is why I love this product.
I want to ask you a question, because I think there's something that's going on in the industry to why most people are not even aware of this product. Because, you know, for me, being that my brother introduced me to the product and you had taught the class, when I was going to get, you know, purchase my home, they were giving me options for, you know, traditional FHA, conventional. They were giving me those traditional options. I said, no, I want the all-in-one loan.
Right.
And they was like, wow, like, how do you know about the all-in-one loan?
I love
really,
it.
like they were surprised that I asked about it.
Right.
And I was like, yeah, this is the product that I want. And after I looked at the numbers, I'm able to pay off my entire mortgage in 9 years versus 30 years.
Yeah.
So
that's the power of interest.
That's the power of interest, right? So the math makes sense. However, I did have, because I had another friend of mine who didn't do the all-in-one. I introduced him to the all-in-one,
and
he did the regular, you know, conventional. He put less money down.
I
put more money down.
Right.
So that was his bottleneck. Oh, I get to put less money down, but you're not, like, I'm putting more money down, but I still have access to that money. Like the biggest thing for me is having access to the money, to the capital.
Right. Yeah.
So that I can continue to be flexible to invest.
And to your point, right? When you have equity, you have what's called leverage.
Yes.
And you teach cash flow and leveraging cash flow. This is what helps entrepreneurs grow their different portfolios, whatever lane that is. We're going to jump into that of how you do that so well. But to that point, when you have equity and you can tap into it, you now have access to do a lot of different things, because you never know when a project's going to come up or where you have to be JV with somebody and you can't borrow, or you have to ask to borrow. Why go through all that when you have all that equity tied up in that house? Because like you said, your house is only worth when you sell it. It's not when you keep all that equity there, right? That's important, right? And I tell this to people all the time. This episode is brought to you by Carrasco, Quintana, a local real estate firm located in the state of New Jersey. They're here to help you with all your real estate needs. What do you think in the HELOC, the all-in-one loan product, I guess the question I want to ask is, how do you encourage people to use the all-in-one?
It comes down to education.
Right.
I said, we don't do what we don't know.
Right.
And you can't do what you don't know, and you fear what you don't know. So I think that's why having platforms like what we have and what you're doing here is educating on the benefits of the all-in-one loan product. And understanding that, yes, you may have to put more money down, but overall it's more beneficial to you because you have more access. So this is exactly what I did. I actually had my money in insurance, right? So you know, had my life insurance policy. I had a whole life policy that I was putting money into for years, right? And the money, the cash value that accrued in my whole life policy is what I utilize as my down payment for the all-in-one loan when I purchased my home.
Oh, really? Okay.
So I use both products together. Okay. Right? So now I have the compounded interest that's growing from the whole
life insurance, right?
And now I'm able to put that down payment towards the all-in-one, which still is accessible to me because it's going on this line of credit, right? So it's just made up of two components. You have the mortgage and you have a checking account, right? And that the money that deposits into the checking account brings down the principal balance and keeps my mortgage payments lower. Right. But for example, you know, I actually have an opportunity right now to go buy another storage facility, and I'm not worried about where I'm going to get the money from because
you have it in the all-in-one.
I know I can go get that money from my all-in-one, and it's not a hard process either. It's a very simple process to pull the money off, and I think like it just boils down to education, Because if I wanted to, I have other properties. In order for me to go get the money out, I have to do an application. My credit score needs to be good. I have to show my tax returns. I have to go 60 days for a process for closing. I don't have time for that.
And you're paying fees for that.
And I'm paying fees for that.
Right. The all-in-one gives you the access right there.
It's right there.
Right.
You can see it. You can see it directly on the card.
Yeah. Thank you for, again, going through it and how easy it is, right? It's education. And again, that's why I have you here today, because I really want to drive it in that the all-in-one is a good product, especially if you're not living check to check. Yes. If you have a decent amount of cash flow, you can pay off your mortgage in 8 to 13 years, just like that, because you are paying down your principal and it's giving you access to cash.
I want to say this really, really quick, right? Because you said, we both said it, that you have to have some cash flow.
Yes.
Right? You cannot be living paycheck to paycheck.
Correct.
And unfortunately, in the neighborhoods that we come from, most people, they're putting down 3% down using FHA, 10% down, because that's really what they can afford.
Correct.
They don't have the excess cash flow. Right. So for me, what I would like to talk about, I know we're gonna get into a little more, is for some of you that's listening to this right now and you're trying to figure out, how do I position myself to be able to afford an all-in-one, right? Because it is a better route for home ownership.
Correct.
Invest in learning a skill set. Maybe you go buy a business, right, that can bring you some additional cash flow.
Correct.
Right? You can go buy a mailbox store. Mailbox store, $50,000, right?
Yep.
It's not expensive. You can go buy a mailbox store, have some cash flow coming in, even if it's $4,000 or $5,000 a month.
That's cash flow.
That's cash flow that you can now utilize towards depositing into this all-in-one, right? So just building up that portfolio to position yourself for that product.
Entrepreneurs, we live and die by cash flow, right? You're not W-2. So there's going to be times, I'll give you a good example. Some quarters you're going to be better than others. If you're in the fixed product, your mortgage is $4,000. Come that month, you have to pay $4,000. Not with the all-in-one. No. You can pay whatever you choose to pay, right? Because you're getting by. Because if you have to pay $4,000 and you didn't make enough deposits for that month or throughout the quarter, you got to use a credit card, right? The all-in-one gives you access to everything you need without requiring to come up with that monthly fixed amount. And keep in mind, you're not escrowing your taxes and insurance. Do you know how much money banks make off of your deposits with the escrow account? Lots of money, because they lend it to somebody else at 26, 29, 30%, and they give you 0.1% on it. That's why it makes no sense. But to your point, we're conditioned to service the lenders, and they make money, and then you get mad when you can't get credit because you don't know how to use it. And this is what the all-in-one does. Do you have to vet us? You should. I would want to be vetted too. But I'm a licensed mortgage advisor. When it comes to stuff like this, my job is not to put you into something and just let it rip. Like, I need you to refer me to other people. So it's my business. It's my fiduciary responsibility to follow up with you every quarter, every 6 months, every year, to talk about your mortgage needs. And this is why it's important when we speak about the all-in-one that I'm in it for the long haul. I'm not in it just to transaction. Here's a check. I make a commission. I walk away from you. No, we're building a community that trust is important. Paying off your debt is even better. Having access to cash lends you to do different things in life. Going back to the mailbox, we're going to speak about that a little bit more.
I have a question.
Sure.
Why at least for me, I feel like it was unknown for me, right? The all-in-one product, until I was introduced to it, right?
Right.
But why is the all-in-one loan product not as popular as FHAs, the conventionals, the different, other loan products that's traditional?
That's a good question, because to get into this product, you have to have a certain amount of credit score, right? You need to have a credit score over 700. You need to have, outside of your deposits, you need to have some type of investment vehicle to use to collateralize against the asset you're buying. There's a percentage behind that. It's anywhere between 10 to 20% of it. If you're self-employed, it's 20%. If you're W-2, it's 10 to 15% of different assets, just in case you cannot make payment towards it. They can use something to apply towards the collateral. Okay. Keep in mind, banks are not in the business of going into foreclosures. They don't like that. So they just want to make sure to get to that level, you have some type of skin in the game, right? Some type of outside investments, because again, it shows that you're not check to check living. So it's no different from a relationship bank account that if you have with Chase, Bank of America, or Wells Fargo, where they call it private wealth where they pledge people's assets to buy houses, right? Notice how when these guys live on the high rises in certain areas, you're like, what's your mortgage? I don't have a mortgage. I pledge my assets. So you can utilize the same concept with the all-in-one, right? The minimum is not as complicated, but for some, it's a challenge because not everybody has a 700 credit score. So that's where FHA comes in and helps. With conventional, the same thing, right? And then the ratios, what we call debt to income ratio. If you're over a certain threshold, the all-in-one would not work for you. To the example we spoke about earlier, if you're making $8,000, your mortgage is $4,000 and your expenses is $4,000, you really check the check. So you're not gonna be able to do it. But if you're making 10, you're able to do that with the all-in-one. So that's what the all-in-one teaches us. Also, I make a case all the time with potential clients. Having the all-in-one is a good thing because if you have, I'll give you a story. Someone had a 3% mortgage rate. His credit card is at 26, 29, 30%, Ramel. Car note is $1,000 a month. He tells me, yo, man, I got 3%. I'm not letting go of that 3%. I'm like, I don't understand. You're holding 3%, but everything else is 26, 29, 32, 34, and you're over $30,000 in credit card debt. What's happening here? Do you know you're just paying interest? You're not getting rid of your debt. But you know that 3% is good, man. I'm like, no. With the all-in-one, you can pay off those bad debts. Now your blended rate is 5.5. Remember, you're at 29, 26, 30% over here. You're holding on 3%. Going back to the conversation we had, your house is only worth money when you sell it, not when you're living in it. The all-in-one says, no, we'll give you that money while you're living in it so you can pay off your bad debt. Just like that, I was able to save him literally 14 and a half years off his mortgage. He looked at me, he was blown away. He's like, Jimmy, you serious? I'm like, why would I lie to you? Like, my reputation is everything. Like, I want you and your family to win. So for reasons, I'm telling you, the all-in-one's the way to go. I said, let's do it now before your credit gets other things because, again, you need to have a 700 credit score. If you continue to use your utilization on your credit, you won't have access to a higher score, which means you cannot get into this product. So we were able to cash out, refinance, pay off the debt, and have him live comfortably with the all-in-one. It's a beautiful product. Again, I'm happy you're here to encourage. I'm happy your brother Jamal put me on the platform to educate those about using the all-in-one. It's really simple. It's a credit card, it's a checking account, it's ACH, it's a transfer, it's assets that's collateralized by the equity you have. This episode is brought to you by Pamela Lee from Elite Title Group, representing all real estate transactions in the state of New Jersey.
I will say this too. Since you've spoken in my community, we have actually 4 students who actually went through with the all-in-one loan process and paid off easily over $250,000 in credit card debt.
Repeat that again.
Easy. So,
Ramel, repeat that again, Ramel. Repeat that again.
Since you've spoken in our community,
right,
4 students have gotten an all-in-one loan and paid off over $250,000 of credit card debt. All because of just having an education to the certain tools and products that's out there. You know, so that's why platforms and like having this education is super important.
Right, and we're not gatekeeping this, and just again, it's to the point of compound interest is in the interest of institutional banks. It's not in the institution of you. When you pay down simple interest, it makes everything easier for your life and gives you access to liquidity. It's a simple format. It's a simple formula that many have used this in the past. They do this in Europe. It just so happened people are talking about it now because of the influence that you have on social platforms, the YouTubes, what you and your brother have done. Great work in the community. It's because of that more are learning about this product, and we're the only institution we broker it out to others, obviously, but we hold it. We are the grandfather of this product. So again, thank you for educating many about this, man. I'm educating people about it. Thank you for sharing your story about how this has changed many people's lives in the community that you talk about when it comes to financial.
Changing my life and many other people's lives, man. We're looking to change more lives with the all-in-one loan product, but we have to be in position for it.
Correct.
You know, we have to be in position for it. So we have more students that's working to get their way there. They're working to get their credit up, working to be able to get themselves, so they have the excess cash flow.
Right.
But once you unlock that level, I think like that's one of the things I want to place emphasis on for somebody that's not there yet. If you go through the process to unlock that level of getting your credit score above 700, getting you some additional cash flow, getting your debt to income ratio down, and qualifying for the all-in-one, now you just open up the floodgates to the unlimited possibilities.
Correct. Yep. Love it. So in conclusion, man, if you know anybody that is considering getting a mortgage and they have a large down payment and they want to know more about the all-in-one, you're going to find my information. And again, man, it's a simple process. We're here to educate you on it and why it's a powerful tool if used correctly, right? Again, my information is all over your favorite streaming platform. Thank you, Ramel, for coming on. Let's talk about it. This is something I'm grateful. I'm thankful, man. Like the stars lined up for me, man. I was able to get the studio and come and have you here. So thank you again for coming and sharing your story with I appreciate it, man.
Yes, sir.
You can find me on your favorite streaming platform. But Ramel, if people are looking for you, where can they find you, brother?
You can find me on all of my socials is Mogul Lifestyle _ MOGULLIFESTYLE_ or Ramel Newerls. You just type that in either or, I will pop up on all platforms.
Okay, cool. Thank you again. I appreciate your time, man.
Yes, sir.
Hey, listeners, are you looking to improve your home comfort and save on your energy bills? Let's talk about Seal Power. They've been awarded Energy Star Sustained Excellence Awards seen on Good Morning America, the New York Times, and World News. Seal Power is dedicated to keeping your home cozy while saving you money. Check out their website for tips and incentives and more at CIELPOWER.com. Stay comfortable and save with Seal Power, where comfort meets efficiency. Follow them on Instagram for updates and more, and let's talk about it as well. Thank you.